Hi everyone, thanks for joining me again. I really appreciate your company and your comments. So I'm going to be talking today about river crossings. And yes, this is a trading video. And in trading, I first spotted that there was this thing that acted like a river of value. And so what I noticed was that price did not move far away from this river of value. And I thought, what's this? So I'm going to recap on some of that, and I'm going to talk to you about what happens and what to look for when price crosses this river and moves from a value that's going down to a value that is rising. And so I think you're going to find this just a great addition to your trading portfolio. The knowledge that you already have is a portfolio of knowledge. And one of the first things that you need to do is, with knowledge, is put it in a frame. And this river of value and looking at price and value from the perspective of, of the fact that they have a relationship is a way of looking at trading that helps you understand it. The human brain works based on these sort of principles, and so it's a quicker way of adopting the learning of trading. And also, because there's a relationship between the two aspects, then you can notice similarities in the changes between the value of price and its movement over time. And that's where the gold is in this. So I designed trading gold around this river of value, and the river of value is created by the gap between, and the lines annotating, the 8 and the 20 exponential moving averages, which is an average of price over time accelerated towards the present. All right, so hope you got that, but you'll get it more if you don't through the video as I go through and describe the charts, which is what I'm going to do now. And I'm going to show you price crossing over. I'm going to show you what it normally looks like. And I'm also going to show you what happens when it crosses and confirms on the other side. Okay, it's a change of value. And I think this will be big for you. Let's have a look at this. So here we are. Here we have a price chart, a simple price chart, and it could be any price chart in the world. It could be any. They all operate in exactly the same way. So it doesn't matter whether you're trading the Dow Jones, the Nasdaq, the FTSE 100, the DAX, any of them. They all operate in the same way. And within this chart, we've got levels, horizontal levels, and sometimes price responds to horizontal levels by causing a bounce, as in a support bounce up or a support bounce down. And there are levels, there are areas where price is congested, like here, that provide greater levels. But that's effectively it. The price goes up and the price goes down. Now, why does it do that all the time? Why doesn't it just go up for a day or down for a day? Well, it obviously depends which charts you look at and which time frame you look at. But over a long period of time, they all look fairly similar to this, jumping around all over the place. And that's not enough on its own for the brain to fully understand what's happening. So it's very difficult and, challenging, complicated to look at a chart like that and understand what's happening. So I decided I would give it some more context and I would look at charts like this. You can see that this has a red and a blue line on it, the blue being the shorter term 8 exponential moving average, the red being the longer term 20 exponential moving average. And so you can see that price spends time above these lines and it spends time below these lines. And because it does spend both time above and below, it obviously has to cross. And that's what we're talking about here. We're talking about the river crossings. In lots of my other videos, I talk about the bounces, which are also a good trade. And these crossings are superb. So here we go. So for river crossings, what we're looking for is a convincing cross. And what a convincing cross looks like is a full-bodied candle, either green or red. So green from the river being above price. The river may be through here somewhere. Price crosses over in one full-bodied bar. And red for short and for price crossing over down below the river. So once the price has crossed over in a convincing way with a full-bodied candlestick, then you need a test. So in this case, price goes up through the river or past the EMAs, and then it comes down to test it. Is it going to act as support, or is it just going to come straight back down through it? And then what you're looking for is price to turn in favor of the trade. So in this case, we're looking at possibilities of a trade upwards, and we need price to first of all test the river and then jump off in favor of it, and that's the trade. Okay, so as soon as that turns in favor of the trade, i.e. you get some green on that candlestick, that's your trade. So just as an example, here's a long trade. So price wobbling along by the river of value, crosses over, convincing crossover, little candlestick wick at the top, and the next candlestick comes down, tests the river of value. And so your entry is there. Your stop is there. So tiny difference between entry and stop, and wait until the end of the bar and take your profit. So look at the reward to risk in that trade. That's your risk, that's your reward. And that's what I'm looking for my perfect trade and the trade within the gold trading system that I have. This is what you get. Price then comes back down, tests the river of value again, turns green and goes up, and that was a bounce trade. So that's the type of thing that you're looking for. River crossings, full body, test, turns in favor of the trade, and you're off. In the other direction here, what we've got is a river crossing short. So you've got the bridge, full body being a bridge, and then there you can see the candlestick didn't quite touch the river of value. So whilst that would have been a good trade, it didn't quite touch the river of value. So you haven't got all of your signals, but you do there. Price goes up, touches the river of value, and then goes down. And that was a 2 candlestick trade. And there's a bounce trade there. Price goes up, actually goes through and back down all in one candlestick, tests the river there, fails the test, as in it didn't go through, and closed perfectly, opened with a candlestick wick which went green, turned red, and on turning red your entry is there, and that's a short. Here's an example of a trade I took, which you can see made me some money, and it was a perfect example of a river crossing. In this case, price came back down through the river, convincing cross, but look what happened on the next candlestick. Went down a little bit, but by then it hadn't, there was a big gap, so no trade short there, and price came back through. So didn't qualify because for a short trade because there was no test, and that's the test. And obviously in this case the test was, I don't want to go down anymore, I want to go up. And so price went up, came back down, had a test. This time round it went green. I entered in exactly the right spot, and I'm about to get out here at these previous highs. And so that's the type of trade that you're looking for a river crossing. I hope that all made good sense to you. It's, this is about keeping trading simple. You've got to look for the same things all the time, and if you don't get, we've got rules here. If you don't get one of the rules in place, if the test is absent and the next candle just turns green, there's no trade, because the chances are it needs to test in order to validate the support or resistance level, and therefore you have to have the test. You've also got to have a convincing cross. You can't have, tiny green, red, tiny green, and then for it to go through. That's not going to work. You're looking for a convincing cross. You're looking for a bridge, and I think that'll engage your brain so that you know what I'm talking about. Right, so that's what I'm talking about in terms of a river crossing. This methodology I've been working for over 10 years, and it's absolutely brilliant. I find it fantastic. You get a fantastic reward to risk ratio, which is half of your equation that you're looking for with a trader. And by applying the rules, you can also get a superb probability on your trade. So the win rate to loss ratio is fantastic as well. And once you've got a good win to loss ratio and a good reward to risk ratio, then you're in business. And that's where I hope you're going to be. If you're not already, I hope you are. And if you're not, that's why I'm here. So I'm Anthony Beardsall. Very much appreciate your company. Thanks for joining me. Leave a comment or any questions if you've got any, or do get in touch with me if you want help with your trading. Thanks for watching. I'll catch you on the next one. Bye for now.